there. Somebody wants to know out there in TV.
I own them all. Commodities are the only asset class where the fundamentals are improving by what's going on. Farmers cannot get loans to buy fertilizer, many farmers. Nobody's going to open a mine for 15 years, Bernie, because they cannot get a loan. So what's happening is actually good for commodities. It's not good for anything else. General Motors is not getting better in all this. Citibank is not getting better, but commodities are getting better. If you're going to own something, you should own commodities. And, of course, they're printing a lot of money, the central banks everywhere, and that has always led to price increase. You know, metals are up like 20% in the last 4 months from their bottom. Most commodities are doing well.
Were you riding commodities down from the top of the last cycle all the way down?
Not sold any commodities at all. Now,
you could kick yourself, right? Come on. I mean, with oil at 100.
Wait, hold on. I was short Fannie Mae. I was short Citibank. I was short. I had what turned out to be extremely good hedges. My shorts went down 90 to 100%. I mean, Lehman Brothers went out of business, so you have to understand that I was extremely well hedged. And Bernie, in 1987, stocks went down 40 to 80% around the world. Was it the end of the bull market? Of course it wasn't. It was just a big whack in an ongoing secular bull market. And in my view, that's what's happening with commodities. Now, yeah, if I was as smart as you, I probably would have sold the commodities and kept my short and been 100% short. I didn't do that. I was very short a lot of stuff, which did me well.
You know what, you told me one thing over the years. You said, you know, things will go up, things will go down, but I do know that the secular trend is intact. And you've stuck by your guns on that. You know,
that's the way I invest. I sell my shorts. It's something that I think is secularly in trouble. And the things I own, I plan to own for many years.
Okay.
I'm a terrible trader. I don't try to trade.
Okay. You mentioned farms. You've mentioned farms at least 4 or 5 times in our last couple conversations together. Is it the soft commodities? Is it the business of feeding people? Is it the you have to eat before you need zinc or aluminum? Is that a fair thing to say?
That's probably true. That's probably true.
See, I am smart.
You do need your zinc pills.
So you'd be buying the grains and farm-related things.
I own agricultural products. I think that agricultural products are one of the best places to be. But as I said a minute ago, metals have actually done better in the last few months than agriculture, but I own both. Bernie, farming has been a horrible business for 30 years. There's a shortage of farmers now. Most of the farmers in the world are old men. This has not been a good business, and it's now going to be a great business.
You know, I went to school in Idaho where they have a great farming agricultural school, but none of the kids just did it because their fathers wanted them, but nobody wanted to get dirt under their fingernails or something like that.
You're
their fathers were still tilling the ground.
You go to Japan, you see fields lying empty because there's nobody to farm the fields anymore.
Okay, let me pull this one up from Wouter. Do we have this one from Wouter? I'm not kidding. We've got 150 emails, so we're trying our best here. Wouter writes in from Britain. Should we invest directly in things like corn futures or buy a stock like a Monsanto, which provides dividends? And what about the agricultural versus oil?
If you're a good stock picker, you should always pick the stocks. But the studies show that over the past few decades, you would have made 300% more investing in commodities themselves instead of commodity stocks. Now, I mean, natural gas, it's tripled. Enron was a natural gas company. Enron went to zero. If you're a good stock picker, pick the stocks, obviously. But for most people, the studies show you're much better off buying the commodities themselves.
Oh, you had to bring up Enron. I think you just scared probably a big swath of the audience off this.
Enron was a stock.
That's dumb.
That's my point. Enron was listen, corn cannot go to zero. Natural gas cannot go to zero. Stocks can go to zero. Stocks can go down a lot, but commodities cannot go to zero.
It's once you get people involved, that's when everything gets kind of screwed up.
That's the problem.
ETFs then by
that's one way to do it.
Very low
ETFs,
cost entry,
ETNs. There are plenty of ways to do ETFs. Are fabulous inventions. ETNs are fabulous inventions.
Okay. Here we go. These are all about the same thing. Let me pull up the gold one here because this is quite a popular one. Gold has been desynced, if you will, decorrelated from usually the dollar and gold go like that, right? In normal times, but now people are, because they don't trust banks, printing presses can be started up and kept going 24/7. What do you think of gold? We're off the top that we marked this year.
Well, I own some gold, Bernie. I do think I'm going to, and if it goes down, I'm going to make more. Remember, the IMF is trying to sell its gold, and the IMF is one of the largest holders of gold in the world. If they sell their gold, it conceivably could knock gold down a lot. But if they do, you better buy all the gold you can, because then it's the bottom of the gold market, and we get rid of the IMF too, because then they won't have any more money left, which is good for the world. But I own gold. I think I'll make more money in other things. I bought some more gold yesterday, Bernie. I went over to the Bank of China and bought myself some more.
Let me see that. You walk around like this?
Yeah.
Do you have bodyguards with you?
I mean, if somebody's going to, I guess I need it. I come on to, let's see, here's one from America.
What's it worth? Mark Faber, your good friend, loves gold. He will always love gold. Although he said gold's had much more action than the other classes. He likes things like silver and some of the base metals right now.
I prefer silver too right now. You can't walk around with silver's cheap. You can't walk around with it.
This is a what? This is American Eagle?
That's a 1 ounce coin, yes.
Okay, 1 ounce. So this is This is $950.
More or less,
there,
yeah.
U.S. Feels really nice, actually.
Right, well, don't take it home, okay?
Well, I thought it was my late birthday present or something. Okay, so you like the purest plays then, and you're within that.
Well,
corn,
I think agriculture is going to do better.
Corn is a must-have. Wheat is a must-have. Coffee is not a must-have.
Well, no, coffee, copper, sugar. Cotton, sugar. These are the things that are down the most on a historic basis. I don't know that they're the best plays. I just buy the agricultural index.
Andrew Morse, Hong Kong director at Robert Half International, one of the biggest staffing agencies dedicated to the financial industry around the globe, and of course, Big Jim Rogers stays with us on the program here. Andrew, welcome.
Good morning, Bernie.
I think you need to diversify outside the financial industry, don't you?
Look, at the moment, it certainly is very, very difficult out in the marketplace. But what we're finding in regards to redundancies out in the marketplace at the moment is people really need to look in the business and what's actually happening in their businesses. So in the business, if you're seeing the bottom line being scrutinised with meals and entertainment, with scrutinising general expenditure.
Right.
People need to be looking at these things to see what changes are actually going to occur in the business. So I suppose they can be ahead of the game.
Okay, let's look at this. Okay, you have a checklist here, sort of the
Sure.
6 key signs that your job may be the next to go, and you better take some action to head that off. Do we have that one? Why don't we go ahead and pull that up and show you? He was just talking about, Andrew was just talking about your company nickel and diming you to death and more scrutiny there. Cost-cutting measures being implemented throughout the company, number 1 there, okay? Number 2, a lighter than usual workload. Now, I haven't experienced that in a long time. Your duties could be maybe reassigned. Maybe they're doing a head count top to bottom, and kind of like where you're getting the maximum return on investment. Work is cyclical with significant slow periods. And then the final 3 here, your position or department head is not being viewed as a revenue generator. It's all about bucks, right? If you don't bring in the bucks, we're not going to spend on you or your position. You're no longer included in meetings, no longer privy, or increased scrutiny on your job by your manager. Kind of goes back to number 1 there. If all these 6 are happening at the same time, should you be saving cardboard boxes?
Look, it's one of the main things that I always let people know. If companies are going through these types of changes, is speak to your manager. Try and be as informed as possible. And if you really feel that your job's under threat and you're actually going through these things, as in your job, there's less work, or you're finding that you're being excluded from management meetings, is try and be prepared for what could happen. So that's having your resume updated, and then obviously speaking to professionals out in the marketplace at the moment. But the most important is to have a chat to your manager, have an open chat to your manager about your performance, and making sure that your performance at its peak, to ensure that, if there are going to be cuts, hopefully that you won't be the first, and hopefully be the last.
Andrew, let me bring in Jim here. Jim, in your long and colorful, illustrious career, a lot of young people, a lot of old people, have come to you for advice.
True.
What do you tell them? You have young kids.